Hi everyone, it's Mortgage Rob here, your mortgage broker serving Cloverdale, Langley, and the Fraser Valley. This is your mortgage market update for July 2012. Extremely interesting and busy couple of weeks. The Department of Finance caught us off guard and actually went through with some changes that we had predicted weren't going to happen. We thought that everything was going to be okay for the time being, but they did make some fairly significant changes with respect to high ratio financed mortgages. The most significant being that they reduced the overall amortization from 30 years down to 25 years. So that $300,000 mortgage just cost you about another $200 a month, as well as the amount that you could qualify for. A family that makes $80,000 a year can roughly qualify for about $75,000 to $100,000 less than they were qualifying prior to that. So it was pretty significant. The other changes that they made were they would be no longer insuring mortgages over $1 million, so that will definitely have some impact on some of the markets around Vancouver. Maximum TDS ratios will be 39%, moved down from 40%. There's still some exceptions that you can have made to go a little bit higher depending on your credit score, amongst other things. And as well, they limited the amount that you can refinance your property from 85% of its value down to 80%. So this should slow down some of the real estate market, should slow down some of the consumer spending. That was their overall target. What the other changes that we weren't expecting was that on the same day, the Office of the Superintendent for Financial Institutions made some recommendations and some changes as well, which we'll see some changes later this year. So those will be limiting HELOCs to 65% of the value of the home. That'll be new home equity lines of credit that people are applying for. We haven't seen any of that instituted as of yet. We will no longer be doing many stated income mortgages. We're going to really have to show the reasonability of income. Again, the changes we're yet to see, as well as free down payment mortgages is another one that, or cashback mortgages, which is another program that basically is going to be done away with by most of the banks coming this fall. So OSFI regulates the major banks. Some of the mortgage lenders will be complying as well. So there'll be some more changes that will come down in the next few months, and I'll do my best to keep you up to date on that. As far as interest rates go, no news is good news, basically. Actually, well, we have had some good news. Two of the major banks came out and did their annual or did some forecasting, and we're not expected to see any changes in interest rates probably in through the summer of next year. So for variable rate clients that have decided to hang on and not lock in that mortgage, that's pretty good news. We probably won't see the Bank of Canada even discuss any changes until possibly the spring, but most likely the summer of next year. And as far as fixed rates go, rates just keep falling. It's amazing. Some lenders you can get as low as 2.99 on a 5-year term today. Most of the lenders settling down into the low 3s. 10-year mortgages, there's still 2 or 3 lenders that are offering 10-year terms less than 4%. So it's a tremendously good time to be looking to remortgage or purchase or whatever you might be. So as always, be happy to review your mortgage and determine what your best options are going to be. Can help you plan ahead for the future, just to make sure that you're not hit with payment shock sometime when rates start to increase. But as for now, it's pretty good news. Basically just kind of carry on. We don't expect any changes probably at least in the next 9 to 12 months, and that should at least allow you to make some decisions with what to do with your existing mortgage. So have a great month, everybody, and hope you're getting away for some great holidays with the kids being out of school. Take care.